Stocks drift lower after a strong open but stay ranged following mixed overnight cues from the US. Metals and Realty lead gains while IT drags.
Dabur India inks a deal to buy 51% stake in Bajaj Masala, marking its foray into the red-hot spices segment. This even as it reports an in-line set of numbers.
Time is running out for Tata Steel UK, says the managing director in an exclusive chat with CNBC-TV18. This even as hopes for support from the UK government to shoulder green costs.
Axis Bank and SBI tell CNBC-TV18 that growth can't sustain without a pickup in deposits. On another note, Axis Bank says that it's committed to Max Life and is not looking at a fundraise right now, at least not till the Citibiz acquisition is done.
It's a negative surprise on margins, which hurt Gland Pharma, while a US FDA import alert for Glenmark Pharma's unit is a dampener. Even Aurobindo Pharma recalls 2 drugs.
Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Ekta Batra. Looking not so bad for the markets, though we're off the highs, currently holding around that 17,700 mark for the Nifty. Is the Nifty Bank, which is outperforming with a gain of almost 0.5%. And for second day running, we are seeing the mid-cap index do well. And today, the heartening fact is that we do have more stocks advancing than declining. Almost 1,500 advancing for about 1,200, which are declining. Hi, Ekta.
Hi, Manglam. Yes, absolutely. But there are a lot of stocks which are in focus in today's trading session, and that seems to also be a theme. And obviously, you know, my eyes are I can't move away from what's happening in the entire pharmaceutical space and the disappointment that we've seen, both from the US FDA regulatory front for a couple of stocks such as Glenmark as well as Lupin, and for Gland Pharma, which is now down 15%. So it's an absolute disappointment which is really coming for Gland Pharma this quarter. And I just want to take you through a couple of key highlights for Gland Pharma this time round. So, for example, the revenue is down around 3%. The street was anticipating a 9% decline this time. Margins of around 28.4% versus estimates of around 31 to 32%, Manglam. So, you know, the street was anticipating maybe that there would be that 30% plus margin which would be maintained for Gland Pharma. The profit came in at around, 241 crores versus an estimated 250 odd crores as well. Now, in terms of, a Q1Q recovery, yes, they did better than what they did last quarter, because Q1Q, the revenue was up 22%. Margins came in at 28.4 versus 31.5%. Now, core markets, which is basically the regulated market segment, was up 3% on a year-on-year basis. India has been disappointing and volatile for Gland Pharma, not as much in terms of a percentage of sales, but nonetheless, it was down 70% last quarter on a year-on-year basis. It's down 40% on a year-on-year basis this quarter as well. Now, what probably supports Gland this time is the net cash, which is still strong at over 3,800 odd crores. The stock has corrected significantly, so it's now down over 50% from its 52-week high. It's trading at around 20 times 1 year forward. And brokerages on Gland have cut their target price. So they've maintained their calls, but they've cut their target price. For example, Bernstein, Goldman Sachs, Incred, all of them have cut target prices. Citi, which has a sell, Morgan Stanley, which has an overweight, has a target price of 2748, and Jefferies has downgraded the stock to hold with a target price which is cut to around 2241. Now, brokers say that the margin decline was largely led by a change in mix plus competition. Morgan Stanley, for example, says a resumption of growth and strong IP visibility would be possible, would grow drivers FY24 on. But the likes of Incred, Goldman Sachs, Jefferies, all of them, Manglam, have cut their earnings as well as EPS estimates.
And that explains why these stocks are seeing the kind of sell-off that they are right now as well. Gland Pharma at a fresh 52-week low as we speak, down 15%. Ahead of results, we do have SBI cards also in focus, and a bunch of stocks are also buzzing around. NMDC, now optically you would see that the stock is down almost 20% but that's because the company is trading its ex-steel business. What does that mean, and what does the street value the steel company at? Nigel joins in with more details. Nigel.
Well, that's right. NMDC is trading ex-steel business today, and that explains why, in fact, it appears that the stock is sharply lower. But it's adjusted for its steel business, and the stock closed at around 130 rupees, on Tuesday. Today, in fact, the stock listed at around 92 rupees. So it effectively tells you that the street is valuing the steel business that's close to around 37, 38 rupees odd. Remember, they're invested close to around 20,000 crores on the steel business. So they're giving it some part of that value in there. What's currently trading is the core business. That's the core iron ore business. And if you look at the EV, it's around 25,500 crores odd. You're adjusting the market capitalization for a cash balance of around 5 to around 6,000 crores. The street is building that in FY23 as well as FY24, the rough EBITDA number should be around 6,500 crores. So effectively, the stock is trading at around 4 times EV upon EBITDA, which is par for the course. Normally, it trades at a multiple of around 4 to around 4.5 times odd. But from here on, the street is building in a much better second half of the year. Why is that? Because the steel volumes are likely to pick up. That means NMDC's iron ore volumes as well will pick up. Year to date, NMDC's iron ore volumes are down by close to 10%. So they need to catch up, in the second half of the year needs to be much better. The second factor is that global iron ore prices have corrected big time. But domestically, the iron ore prices have been holding out from the month of August itself, which is quite encouraging as well, giving you a sense that maybe iron ore prices here in India are bottoming out. And finally, it has this yield factor as well, dividend yield factor that plays out, which is around 6 to around 7% odd. So given all these factors, well, the stock, it opened up sharply lower, adjusting for around 37, 38 rupees odd. But it appears the core business is seeing some buying from lower levels, and that's why it's recovered more than 10% from the day's low. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's on NMDC. But let's focus on some more stocks in focus this morning. Bayer Crop Science and Sumitomo Chemicals are in focus after the centre restricts the use of a widely used herbicide, glyphosate. Sonal is joining in to speed us up with the details. Sonal.
Thanks a lot for that. Well, yes, these two stocks will be in focus because of the news that the government has finally restricted use of a widely used herbicide, that is glyphosate. The discussions have been going on for last 2 years. That was the first time a draft notification suggesting that usage should be reduced had come out, and now it is final. This is an important herbicide which is used across the country for something in tea plantations, which is used to kill some of these pests as well. But now it will be applied only through pest control operators. In terms of what the report suggested is that already in some of these states like Kerala, Andhra Pradesh, Telangana, Maharashtra and Punjab, usage of this particular agrochemical is already banned. Now, how does it impact Sumitomo and Bayer Crop Sciences? It is because these two companies are one of the biggest producers of glyphosate in the country. How does it impact UPL? Well, glufosinate is used as an alternative to glyphosate. Usually when glyphosate usage goes down, glufosinate usage goes up, and UPL is one of the bigger producers of glufosinate in the country, and it provides a majority chunk of revenues for the company as well. So that could benefit. The stocks are up today, both Bayer Crop Sciences and Sumitomo, but there could be a longer term impact on volumes for these companies.
All right, we take that point, Sonal, hang in there, because, we do have a bunch of stocks which are buzzing around. On the previous trading session on Tuesday, we did see PSUs gain a bit, and now that buzz continues. BHEL, for instance, is at the high point. Bharat Forge doing well, not a PSU. We do have Container Corp as well, which is sitting at a gain of almost 4.5%. All the railway-related stocks were a buzz on Tuesday. But a bunch of stocks which are declining on the back of numbers. We have Philips Carbon as well as Chennai Petro trading with deep cuts in reaction to their numbers. Sonal.
They are. So let me start with PCBL or Philips Carbon, where it was a big margin miss. Yes, revenue grew 52%, but EBITDA declined 1%, leading to a margin decline of almost 600 basis points and profit decline of 4%. Now, the company in its conference call said that yes, volumes were impacted in Q2. It is largely because of capacity constraints. They do have a new facility coming up in December 2022, and the peak utilization levels for this particular facility will be reached in next 2 years. They have a sizable exposure to Europe. The total carbon black market has an exposure of 18 to 19%, and just for companies' exports, it's around 15 to 16%. So whatever we've been talking about, power shortage, higher power prices, that is something which impacted production in Europe for Philips Carbon, and hence the decline in margins as well. For Chennai Petro, it was a howler of a quarter, largely expected because GRMs had fallen down, the Singapore GRMs that is. This has led to a revenue decline of 16%, EBITDA down 93%, margins have come in at 1.2% versus 14.7%. There was a forex loss, there's an inventory loss because crude prices were down, and profits are down 99% on a quarter-on-quarter basis. Even GRMs for the company at $4.50 per barrel versus $25 per barrel on a quarter-on-quarter basis. So a big slide in the stock price as well.
Okay, all right, Sonal. Thanks very much for that. So that's an update on a couple of stocks in focus. But the big one is Tata Steel. The CEO, TV Narendran, says time is running out for the company's UK business. Speaking exclusively to CNBC-TV18, he says the steel major hopes the UK government will take a decision on funding soon. Listen in.
Most steel companies to their governments across Europe is at least 50% of the capex that needs to be spent needs to be supported by the government. On top of that, there needs to be support on OPEX to the extent of the differential in energy costs when you move from the current energy sources to new energy sources. I think these are the fundamental principles, not just for Tata Steel, but pretty much all steel companies in Europe have been talking to their governments about. And so that's as much as I can say now without getting into the specific. Each of our businesses need to stand on its own. We have supported the business for a long time. We have invested a lot of money over the years in trying to keep the business going. But I think now it's time for other stakeholders also to chip in. The time available is depleting by the day because we had a year when the steel prices were good, the spreads were good, the business could stand on its own. That gave us some breathing space. But that breathing space is rapidly vanishing because of the high energy costs in Europe and the macroeconomic conditions in Europe and UK, right? So we don't have much time, So we need to get to this decision sooner than later, and I think that's been a submission to the earlier governments, and there'll be a submission to the new government. What are the options that we will pursue or discuss when we reach there?
Okay, so that's the management of Tata Steel, and you'll get to listen to more of that conversation through the day. As of now, we need to take a short break. Up next, we're going to be speaking to Ranbir Singh, the MD and CEO of GNA Axles, to discuss their Q2 performance. Stay tuned. Welcome back. Well, holding steady for the markets at this point in time, we have the Bank Nifty, which is up around 0.4%. Just want to point out one more stock from the pharmaceutical space, which is Piramal Pharma. So it is the demerged pharma business of the Piramal Group, which has got listed, or rather relisted last week. And that stock has actually been on a downtrend ever since. It's down around 5% in today's trading session as well. And it listed at over 200 odd rupees. So that gives you a sense in terms of the kind of correction that we've seen for Piramal Pharma. So just keep your eye out on that particular stock, along with a lot of the pharmaceutical stocks which are on the back foot today. But let's move on to the auto space then. The festive season has been a mixed bag for the automotive sector. While passenger cars have reported a solid 40% growth over last year, entry-level vehicles continue to struggle. Parikshit Luthra is here with the festive season report card.
Well, it's been particularly good for the passenger car segment. 400,000 cars were delivered during the festive period, which began on the 26th of September with Navratri and went all the way till Diwali and Bhai Dooj. Maruti Suzuki saw 45% year-on-year growth in sales. This is what sources tell us. They retailed around 190,000 units during this period. This was higher than last year, but lower than 2019 or the pre-COVID year as well. Strong demand for SUVs such as the XUV700, the Scorpio, the Creta, Harrier, Safari, Seltos, Carens and the Vitara. The Mahindra Group told CNBC-TV18 that this festive year has been significantly better than last year, and they're looking at a 2x or 2.5x growth over last year as well. Mercedes-Benz saying they saw a 15% growth, 800 cars delivered on Diwali, 600 cars on Dhanteras, and they have a order book of 1,000 cars as well. Double-digit growth for the two-wheeler segment is expected, but at the same time, the entry-level commuter bike segment, the entry-level scooter segment continues to be under stress across the country.
All right, we take that point, Parisha. Thanks a lot for that. Passenger vehicles selling well, but is that reflecting in all the auto ancillaries as well or not? Let's get chatting with the management of GNA Axles. I mean, to set things up, they posted a strong set of numbers in the second quarter. The revenue was at a multi-quarter high. Ranbir Singh, who's the MD and CEO of the company, joins us now. Thanks a lot, Ranbir, for joining in. Season's greetings to you, your family, your team as well. 420 crores in this quarter. This
is that the government is working on a plan to reduce reliance on imported raw materials. Parikshit?
Well, that's right. This is a plan which is in advanced stages of consideration, and government is considering bringing a PLI scheme especially for vaccine raw materials. The new PLI scheme will focus on manufacturing of key vaccine raw materials, APIs and KPIs in India. The brief to policy makers within the government is that we need to reduce dependence on imports from China and the United States when it comes to raw materials for vaccines. Incentives under this scheme could be to the tune of 5,000 to 6,000 crores. The PLI would be aimed at increasing investment in manufacturing of vaccine raw materials in India and import substitution as well. The scheme is likely to cover all vaccines manufactured in India. Industry sources tell us that the government has been consulting them. There has been a circular sent to all pharmaceutical companies in India, asking them for suggestions, asking them for the amount of imports of vaccine raw materials they do, what is their level of import substitution. Currently, India is importing 70% of its vaccine raw material requirement. At least 350 raw materials are used in manufacturing of vaccines in India. So we believe that all pharma companies have sent their suggestions to the government. There could be a stakeholder meeting with policymakers with the government very soon. And in the next few weeks, we could hear of the contours of this scheme as well. The government already has a PLI scheme in place for medical devices, for certain medicines and certain drugs as well. 7 to 8 sectors are being considered right now, and we could hear of PLI schemes for toys, leather goods, apparel, shipping containers, coal gasification, specialty steel, specialty chemicals, vaccine raw materials. But vaccine raw materials clearly is one of the priority sectors for the government there.
Okay, important update coming in, Parikshit. Thanks very much for that. And well, those are the PC Jewelers numbers on your screen. It's looking better than expectations. At least it's a turnaround on the bottom line. And margins have improved all the way to around 16.3% versus 7.1% on a year-on-year basis. And net profit has come in all the way at around 86 odd crores versus a loss of around 79 crores on a year-on-year basis. As you can see, PC Jewelers, the stock is up 3.6%, much more jewelry buying because the revenue is up 60% year-on-year for that particular company. Well, we need to take a short break. Before we do that, here's some great news for investors. You can now track the US market action in real time on Money Control. Log on to the Money Control website or app and stay informed about all the matters in the global markets.
जिंदगी को दें रफ्तार, शुरू करें इसी त्योहार, खुशियों का सफर बिताएं साथ मिलकर। त्योहार तभी हो जब अपने साथ हो। SBI के संग इस त्योहार छोटी किश्त से बड़ी खुशियां ले आए। SBI, the banker to every Indian।
बेटा, तुम करते क्या हो?
ये कबाड़े वाले या रत्ती वाले।
अब जब बाजार के ऊपर मकान होगा तो परिचय भी कुछ ऐसा ही होगा। सिग्नेचर ग्लोबल सिटी। एक दुनिया वो थी और एक दुनिया ये। गली मोहल्ले की चिक-चिक से दूर, दिल के पास। बालकनी खोलो तो आवाजें यहां भी आती हैं। चिड़ियां यहां थोड़ा जल्दी उड़ जाती हैं। इसीलिए इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू। सिग्नेचर ग्लोबल सिटी।
अगर आपका म्यूचुअल फंड भी बदलते मौसम के लिए तैयार रहे तो बैलेंस एडवांटेज फंड है मार्केट के उतार चढ़ाव के लिए हमेशा तैयार। म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें। एक्सिस म्यूचुअल फंड।
OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस।
क्या बात कर रहे हो? यही कि OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस। ये प्राइस नहीं, सरप्राइज है। विजिट olxautos.in।
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
Welcome back. Well, let's get some red into the screen now. Dabur India has inked a deal to buy 51% stake in Bajaj Masala, marking its foray into the red-hot spices segment. Manglam is here in our value-add segment on Halftime Report on the Indian spice market. Manglam, take it away.
Well, that's correct. You know, the Indian spice market is heating up, and the latest entrant in that is Dabur, with a 51% stake purchase of Bajaj Masala for about 587 crores, valuing the company a little over 1100 crores. So what does that mean? By their own estimates, it is a 4.5 times FY23 price to sales and 20 times EV to EBITDA. So what does this mean? That Bajaj's FY23 revenues are likely to be around 256 crores with margins of 23%, EBITDA of just shy of that 60 crore mark. However, the data point that stood out for me the most was that 82% of their revenues come in from blended spices sales. What are blended spices? Blended spices are basically not regular spices, but pav bhaji masala, kitchen king masala, chaat masala, so to say. It's marked the foray into a 25,000 spice category, which at 2020 was 24,000 crores, and by 2025 is estimated to be 50,000 crores. Why is that? Well, because currently only 24% of the market is organized branded. By 2025, this is likely to be 50%. And in that, the fastest growing segment will be that of blended spices. Currently, blended spices account for just 24% of the sales. Going forward, this is likely to be 65%. Why is blended spices the key growth driver? Well, because blended spices have 3 to 3.5 times higher realizations. I mean, you can take 5 different masalas and sell it separately, or you blend it as a pav bhaji masala and sell it for 3 to 3.5 times the price, and that means the gross margins jump from 33-35% all the way up to 50-odd%. What are the other drivers in the spice market? The biggest driver is the number of deals that have taken place. In November 2019, we had Investcorp investing almost 80 crores in Intergrow brands. Then May 2020, we had some other big announcements as well. ITC entering the 2150 crore deal with Sunrise Foods. June 2020 and September 2020, we had big investments. A91 investing 125 crores in Push. And as of September, we had Okla and MTR buying Eastern Condiments for about 2,000 crores. In the listed space, we've heard, Tata consumers selling spices under the Tata Sampann brand, and Nestle as well, selling their Magic Masala under Masala-e-Magic, those brands. So it is a market which is growing fast. What are the key drivers for the growth? Higher share of organized market, higher gross margins, and increased experimenting in kitchens, which actually started during the COVID times itself. And also people need convenience, so they're ready to spend in masalas as against making them themselves, and higher brand stickiness. If you like a certain masala, you're likely to stick to it through your lifetime. But what are the problems for this market going forward? Regional local companies are the ones which dominate, because you want a certain taste coming in from a certain brand itself. So high stickiness can be a boon or a bane. Different cuisine and taste palettes in India are not one big company can succeed here, which is why we've seen a lot of regional players, and there has been a lack of success by MNCs in the past who've looked at this spice market. The question is, can Dabur spice things up here?
Okay, well, time will tell, Manglam. Thanks very much for that extremely colourful analysis of the spice market. And who knew that M&A is so rampant within that entire space as well. Dabur in focus. In fact, high point of the day for Dabur, up 3.5%. We'll take a short break. We'll get you more on the markets. Lots more stocks in focus on the other side. Stay tuned. Welcome back. Well, it's drifting a little lower for the bank Nifty. Nothing really to write home about, but there's a little bit of volatility which seems to be setting in at this point in time. So do watch out for that particular index, currently just about higher by around 0.3%. When we started the show, it was higher by around 0.4%. So you can see that's a little bit of profit booking which is taking place at higher levels. But let's focus on another story now. LT Foods is in focus. Sources tell CNBC-TV18 that PE funds may be in the race for acquiring a significant stake. Vivek Iyer has all the details on this particular story. Vivek, go ahead.
Well, good afternoon. So what we are understanding is that, we understand this from our sources that indicate that certain PE funds are actually looking to pick up a significant stake as far as LT Foods is concerned. What we understand is that this particular stake sale could be quite significant in terms that, it could actually trigger a management change. And if that does happen, remember, that it could trigger an open offer. So what we understand is, at the end of this September quarter, we understand that the promoter group actually held close to 56.8% stake in the company. So any, significant stake that is being purchased by an outside investor like a PE fund would actually trigger an open offer. Significantly, management control changing hands would actually indicate that the open offer could happen at a premium to the current market price. Now, what is very interesting is that, a couple of days ago, LT Foods actually has sent out a notification to the exchanges. And what they're saying is that, a board meeting will be held on 31st October 2022 to consider fundraising. And what they're saying is that the board meeting is also going to discuss future strategic plans of the company. And they'll also be discussing reorganization of the shareholding framework of subsidiary companies if required. Now, taking into account this particular development, it'll be interesting to see, what is the outcome of the meeting on October 31st. Also, very interesting is going to be the fact that, how exactly is the company going to change if there is a significant change in the management control. We reached out to the management. They're yet to respond to the email that we sent out to them.
Take that point, Vivek. It's a great break. We will monitor the situation as it comes about. Even if the management does not respond specifically, we don't have to wait for too long. 31st October is when we will know the details of what they've discussed in the board meeting, as Vivek pointed out as well. There has been a minor spike in the share price of LT Foods. But if you just take a look at the way the stock has moved over the last 5 to 10 days, you would see that, some anticipation of some sort was building up, because we have seen a bit of a rally in the stock price itself. There you have it. In the last 1 month itself, it's up almost 18%. Take a short break, come back. We talk about the commodity space, metals in focus. Chirag Seth joins in with Manisha Gupta to discuss metals as the metal prices rally on a weaker dollar.
Welcome back. Well, for the mid-cap index holding with a gain of around 0.4%, we have a good advanced decline ratio, which is largely even keel as of now. So 1:1 is where the advanced decline ratio is standing. In terms of a volume picture, it is definitely a lot of momentum which is coming in for RBL Bank. So watch out for that particular stock. It already released numbers. If you look at it on a month-to-date basis, it's already rallied around 20-odd%. It's up 10% today itself, and huge amount of volumes which are being traded on that particular counter. So 136 odd rupees currently for RBL Bank. Following suit is something like a Zomato, which is doing a large number of volumes, but the stock holding up with a gain of around 1% at this point in time. But now let's go across to Manisha Gupta, our commodities editor, who joins in now. Manisha.
Thank you so much for that, Ekta. Well, I'm looking at the precious metal prices because this week really seems to be sparkling bright. We have seen good demand. The decline in dollar index has been supportive. And for the Indian markets, because of Dhanteras and Diwali, the numbers are coming in quite huge on what the physical demand has been when you look at gold and silver. But our focus is going to be silver because it started as a green metal along with other many industrial commodities as well. And we are looking at the silver prices trading at almost a 3-week highs right now. So $19.5 per ounce, just about holding. Chirag Seth, his principal consultant, South Asia at Metal Focus, he joins us on the show now. Chirag, hi. A lot of industry associates tell us that this is going to be an year when India will see record imports of silver. What is the kind of demand that we are seeing, and what sectors is this demand coming in from?
Good afternoon, Manisha, and happy Diwali to your listeners. I think we've seen, very good flows into India. In fact, up till September, 8,000 tons of silver was already imported, something which is of a record in that period. I think, what is happening is that there is a broader demand recovery that we've seen in silver, both on the non-industrial usage like silverware, jewelry, investment, but also industrial demand, which is benefiting from the whole China plus one strategy. A lot of people that we speak with are saying that they are receiving order flows from US, from Europe, something that they did not receive probably prior to 2020. So you're seeing a broader recovery across the demand segments for silver.
So while in India we are looking at a record number, and 8,000 tons you say is already done, which is the highest ever, what is it that you're forecasting this year to end with?
To be honest, we were playing around with a number of 7,000 to 7,500 tons for full year. So this has already surpassed our expectation. We believe another, 800 to 900 tons each month could very well come into the market. So we could be very well moving past 10,000 tons for the calendar year.
Is that the highest ever, Chirag, for the whole year?
Yes, 8,000 I think was the highest for full year way back in 2016 or 17.
You also said that there's strong demand coming in from the Middle East and US as well. So what are we globally looking as in sense of a number in silver demand for this year?
Globally also, silver market is likely to see fairly decent growth. I won't be able to divulge the number because the interim silver survey is likely to be released in 2 weeks' time. But overall, I think silver demand globally is seeing strength, especially the investment demand. You look at the silver eagle coins, which are a barometer of the global investment market, are currently trading at 40 to 50% premium. So silver at this moment is the flavor of the season in that sense.
And is it expected to be so? Are you advising investors to continue holding, accumulating silver?
I think, silver has had a very good run over the last couple of months. However, we believe that the upside could be limited. And probably over a year or year and a half, we could see a bit of downside, maybe towards $16.5 to $17 in next 12 months or so.
Chirag, a lot of people that I have been talking to tell me that between gold and silver, silver perhaps is going to be a better bet. There have been forecasts ranging between 65,000 to 80,000 on the higher side as well for the next 12 months. If you were given that time horizon, 12 months is a huge thing because we're looking at various uncertainties, interest rate hikes, recession fears. There is so much that is not sure on how the markets will react to. Would you still look at those kind of gains coming in for silver?
Not really. I think we are more, on the lower side. In fact, we believe that both gold and silver could actually see downside. And however, we believe that probably the downside for gold is, less than compared to silver, purely because of the fact that silver has had such a good run over the last, couple of months. So in that sense, if you look at on a relative basis, we believe gold would outperform silver.
And how are you looking at gold as well? Because the imports into this one seem to be quite strong. We're looking at Dhanteras, Diwali numbers ranging anywhere between that 25 to 39 tons on the higher side within a matter of that 1 week itself.
I think demand has been very, very strong. Now, what we'll have to see whether this momentum continues into the quarter, because last year, Q4 was a record quarter. If that happens, then we are well in for a 600 to 650 ton of jewelry consumption this year.
And how is the investment demand coming in for gold? Because that hasn't been so strong globally. We've seen ETF outflows just about continue.
Same thing for India, Manisha. In terms of investment demand is largely flat to marginally negative or positive. We've not seen investment demand do as strong as the jewelry demand. Also, I think in India particularly, what is happening is that, as you are aware, a lot of investment demand eventually gets converted into jewelry at a later date. So a lot of people are using this price drop to directly buy jewelry rather than buying bars and coins and converting them into jewelry at a later.
All right.
Okay, all right, Manisha. Thanks very much for that. Well, that's what's taking place in the entire commodity space. But just want to point out, maybe we can pull up a couple of stocks such as PC Jewelers, which came out with its numbers just a couple of minutes ago. So maybe we can just do a status check in terms of how PC Jewelers is performing. So move to the high point of the day after what has been quite a strong quarter in terms of a year-on-year performance for PC Jewelers. A couple of other stocks that stand out in terms of movement is something like an Anand Raj. So that stock is up around 3% odd. Fortis Health from the healthcare space is also holding up with a gain of around 3% odd. And a lot of the banks continue their momentum. So I did mention RBL Bank just a couple of minutes ago, but even something like a Karur is up around 6.5% odd. Karnataka Bank too is up around 3% odd at this point in time. Well, it's a wrap on halftime report, but stay tuned. Business Lunch will take all the action forward.